Good afternoon. My name is Dan Marzano, UBA Manager of Strategic Solutions. On behalf of United Benefits Advisors and HRPro, I welcome you to today's presentation in the UBA Employee Benefits webinar series. Today's topic is lifestyle spending accounts, and our presenter today is Jennifer Wajeeh of HRPro. Jennifer, the floor is yours.
Thanks, Dan. So today's topic, as Dan mentioned, is creative employee benefit strategies. It is how to use a lifestyle spending account to build a better benefit plan for your clients. I'd like to welcome you all to the webinar. Thank you for taking the time today. My name, like he said, is Jennifer Wajeeh. I am Vice President of Sales and Marketing here at HRPro. I have been with HRPro for over 8 years. I oversee both the marketing and the sales team. I have over 20 years experience working in the roles of sales, contract management, government contracting, people management, and excited to put this presentation together today and help share some of our knowledge on this new benefit that's available. So it's become common to overgeneralize about the generations and to assume what benefits would value each generation. But really, workers value a lot of the same things. You know, it's just a different priority based on their age group. So when you're young and you're starting your career and you're unencumbered by kids or family or mortgages, the focus may just be on growing your career, building social capital, and finding that next really cool opportunity. As you grow older and you have a partner or children or elderly family members that we have to take care of, the focus is frequently shifted to doing just a really good quality work, maximize efficiency, and make sure that your benefits really fit into that stage of your life. And then as you get older and older, you get to be more senior, the priority kind of switches towards sharing your knowledge, leaving that legacy, mentoring people, contributing to the organization. So the reality is generational workplaces, they're here to stay. All generations and lifestyles care about growth, social capital, effectiveness, sharing their knowledge. But people tend to prioritize them differently based on their life stage. So the implication for that is companies are wise to consider what's most important about work for all the generations and to treat people as individuals, listening, empathizing, and providing choice as much as possible across all the generations. You're probably going to have up to 5 generations in the workplace. Now, there's no one source that can agree on the ages here, but these are kind of some guidelines. I mean, you've got the silent generation, you know, some of the older generations who are in retirement, retiring, on the cusp of retiring, baby boomers also about to retire. You've got Generation X who are, you know, middle of the road kind of in their age, and millennials who are new to the field, and Generation Z who are some of the youngest people in the workforce today. And employees need to be considered when you're drafting a benefits package, because if you're drafting a benefit package that just relates or resonates with one generation over another, that they're not going to be happy and you're going to wind up losing really valuable people. So offering employees a benefit that just doesn't fit their needs, it can be very frustrating to them. And that's why some employees are choosing to leave organizations. So it's really important to find out what employees want and what's important to them. And the way that we recommend doing that is surveying employees, sending surveys out to ask them what matters to them, what do they prize over other things, what benefits are important to them. With 5 generations in the workplace, you're going to have an option for everybody. And some of the things that some of the different generations are valuing, you've got the silent generation, of course, those older people, you know, they want to share their knowledge, they want to be mentors, they want to leave that legacy, but they're looking for traditional benefits. They just want your traditional benefit plan. They're not looking for those crazy out of the box things. They just want to be covered, and they want to be covered well. Baby boomers, same thing. They want traditional benefits, but they've got a really strong work ethic and they value loyalty and they want to do great work and do the great work with maximum efficiency. Generation X, that's when that generation, they're starting to take on new leadership roles. They want financial stability. They want to be able to meet the needs of their family and take care of their families. They want to be able to telecommute. They want some flexible time off. Some of those really out of the box benefits really start coming into play when you're talking about Generation X and beyond. Now, millennials make up the bulk majority of our workforce nowadays. They are our biggest group of people in the workforce. They want meaningful work. They're more interested in social aspects. They want creative outlets for their work. They want out there benefits, something new, exciting, something that other people aren't offering. They want to make sure they have financial wellness, but they also want to make sure that they have remote work and things that are going to support their lifestyles. And then Gen Z, the babies that are just getting started in their career, they're coming aboard. They're looking for more socially relevant benefits. They want to make sure that their workplaces are diverse and that everybody's included. And they want to make sure they're getting a livable pay. They want to be healthy, safe. They want a great place to work, and they want a lot of growth opportunity. So each generation that makes up our workforce, they all want different things, but in whole, they just all want to be supported by employers in the right way, in the way that they see fit. So there's an interesting article I read on SHRM called The Generational Mindsets Affecting the Workforce. So these are some of the things that the pandemic has had relating to the workforce, some of the impact it's had. So 25% of millennials and 22% of members of Generation Z, they want to work in the office less often. Before the pandemic hit, telecommuting was something that, was not really offered across the board with a lot of organizations. But now you'll see a lot of organizations offering telecommuting, offer different kind of hybrid remote opportunities. Less than half of the millennials, 47%, and less than half of the members of Gen Z think businesses have a positive impact on society. So you're talking those younger generations, they want to make sure that what they're doing is relevant and it makes sense, and that their organization is giving back and helping society. The Great Resignation is still likely to continue, with 36% of millennials, 53% of those in Gen Z saying they would leave their current employers within 2 years. That's some of the things that you're trying to prevent as an employer, is preventing that Great Resignation, or preventing some of those top talent in those generations from leaving your organization and going elsewhere. Also, those responded in the survey say that they have felt immense stress due to the pandemic. Now more than ever, people are struggling with their mental wellness. They're feeling stressed because of the changing work styles, because of different responsibilities being put upon them. So the question is, how do you address some of those things, and what do you do? Also, as an employer, you want to attract top talent. You want to engage your current employees. You want to keep them happy and engaged in your workforce, and you want to retain that top talent. So what do? How can you meet everyone's needs to attract and retain talent and better engage with your employees by showing them that you understand their wants and needs based on where they are in their life? Lifestyle spending accounts are one of the tools that you should have in your arsenal to make your company more competitive in the war for talent. What is a lifestyle spending account? So a lifestyle spending account is different than any other account you're going to encounter, any of the consumer-driven healthcare accounts. So basically, in response to the pandemic, employers wanted a way to give back to their employees in the areas of physical, mental, and financial wellness. But they soon realized that a growing need for support fell outside that IRS-mandated 213D allowable medical expenses. They couldn't kind of put it into that FSA bucket or an HRA bucket or an HSA bucket. They wanted to give back in areas of physical wellness, mental wellness, financial wellness, but they weren't sure how to do that. So this came out of the pandemic in a way to combat those growing demands, and allows employers a vehicle to support across the board different needs and wants from each of the generations to support their employees' health and wellness activities. So you might be asking yourself, if this is so different, how does this benefit the employee? A lifestyle spending account, it allows funds established by the employer to be used for eligible expenses related to physical, mental, financial wellness to meet the needs of everyone. Like I said, this is across the board. You can set this up so that it accommodates those in the younger generations and those in the older generations, to accommodate the needs of everybody across the board. Think of it kind of like a bonus program set aside for employees and dedicated to the expenses or experiences that they value the most. And then how does this differ from an FSA, HRA, HSA, some of the consumer-driven healthcare? This is so different from those. Whereas FSAs, HRAs, and HSAs have that pre-tax allowable benefit, LSAs are funded by employers with money that is taxable as income to the employees. That is the big difference here, is these funds are taxable funds when they are spent by the employer. Unlike the tax advantages of HSAs, FSAs, and HRAs, where all those funds that are withdrawn are all done pre-taxed, LSAs are not allowed to do that. So that being said, employers get to decide how employees can spend their lifestyle funds, acceptable products they can use it on, services they're going to allow. Many of the employers see this as an ability to limit and direct employee spending of employer provided money. If this is a compelling reason to offer a lifestyle spending account. If you were to just give everybody a bonus at the end of the year, they could use that bonus on anything they wanted. But if you really wanted to address some issues within the organization, like giving back to some mental wellness, for example, or adding to maybe a wellness account or a lifestyle account to help them with their financial wellness, then you can direct where those funds are gone. The taxability of LSA funds, although it's a disadvantage, it avoids many of the legal or regulatory constraints placed on tax advantages accounts. And how that benefits the employer is it makes the account really kind of loosey-goosey in how they set it up. Things about substantiation and what they can use the funds on are really driven by the employer. So what kind of things can you use lifestyle spending account dollars on? So things like physical wellness, maybe they want some athletic equipment, or maybe you want to join a health club. Maybe they want to take some golf lessons, swimming lessons. They want to get fitness trackers. Maybe you're just going to put a fitness account in because you are concerned about your employer's overall health and well-being. Now, if you put a plan in place where, say, it just paid for gym memberships, well, maybe those older generations don't want to join a gym. Maybe they just want to do something at home. Maybe they want to put a home gym in. So it's important to establish guidelines for reimbursement. That way, whatever TPA is managing the accounts can easily pay the claims to employees based on the guidelines that are set. Employers may limit funds for categories like fitness and wellness, or set it up more broadly to allow anything that enhances a person's well-being. It could be spa treatment, self-help books, self-help classes, maybe pet care expenses, vacation expenses, or even crazy things like ergonomically designed desk chairs. Think of your standard health reimbursement account covering medical treatment related expenses, while LSA funds are used for more preventative measures. Note, this is not a pre-taxed account. There are very little limitations on what you can set this up for. So some things we like to say that you could not use funds on because it is pretty wide. You know, we talk about drugs, alcohol. We actually had somebody want to file a claim for firearms, and they wanted to have an assault rifle reimbursed. Weapons, any of those things are not reimbursable, and most employers should limit those because of the dangers involved, obviously. Financial wellness, here it talks about student loan reimbursement. Because of the pandemic, student loan reimbursement was tied in with tuition loan reimbursement. It was part of a pre-taxed account. As soon as that all goes away, student loan reimbursement will again return to not being a pre-taxed allowable account. Maybe you could put that in here. Home purchase expenses. Maybe you want to help somebody out with buying a new home or getting a financial advisor, especially when we looked at those generations and you're looking at the people from Gen X and beyond. Those Gen Xers, they're really concentrating on their money and how they are trying to put this all together. And then emotional wellness. Now, this is probably the one that I will tell you most companies are setting up lifestyle spending accounts for. It's to give back to their employees in the areas of mental wellness. People are really struggling with stress, and they're just under a lot of different kind of responsibilities nowadays. You know, just the whole isolation period alone put a lot of stress and a lot of returning to work has made it difficult for some employees. So helping them get through them, they can put a lifestyle spending account in. I'll give you, for example, we have a group that has an EAP in place. The EAP reimburses non-medical counseling sessions. If you're seeking counseling for medical reasons, then it is something you could use for FSA or HSA. But if it's non-medically related and you just want some extra counseling because you're stressed or what have you, the EAP paid for a certain amount of counseling sessions, but beyond that, they wanted to help support their employees beyond that EAP allowance. So they allowed the lifestyle spending account only to kick in when those EAPs were exhausted. That's how granular you can get with some of these lifestyle spending accounts. I could literally set one up that just reimbursed gym care or gym memberships, for example, or yoga classes. It could get very creative. Maybe I want to talk about emotional wellness, and perhaps I want to get a Spotify account because I want to download podcasts. I want to download some of those meditation apps. So you can really get kind of as creative as you want to get. Now, here's some examples on attracting employees with a lifestyle spending account. How do you do that? So job applicants now they simply expect more from potential employers. Not only salary important, but applicants are looking for potential employers that support their lifestyle, support their values. Attracting and retaining top talent is crucial to your company's success because hardworking employees drive your business goals and are really costly to replace. So a lifestyle spending account is a great way to separate yourself from the competition and give a concrete example of how you support their lifestyle and their values. Although a lifestyle spending account is similar to an employee bonus, it's presented to employees as an additional benefit, focusing on the employee. So I'm going to give you an example of two different scenarios here. You've got scenario A, company A, and company B. So with company A, Jane's interviewing for a new position at ABC company, say, for example. The interviewer tells Jane that, Jane, this interview went great. We would love to have you aboard. Just want to let you know that at the end of the year, we give all our employees a $1,500 bonus. Jane's going to go, wow, that's a really great benefit. That sounds great. She's going to walk out of that interview feeling like that was a really good benefit. Now, company B, however, they understand that they're trying to stand out in the industry and they're trying to do things a little differently. So Jane's interviewing for a new position at XYZ company. The interviewer tells Jane that their employees are very important to them and their mental health is very important to them, and they want to make sure that they have a really good work-life balance. So to do so, they want to make sure the employees are checking out and they are spending time with their families. So they put in place a $1,500 vacation fund to use however that employee wants. They tell Jane during the interview, take your kids on vacation, go to Disney, enjoy your time off. We want to make sure that you are doing that. If you don't want to use it for a vacation, maybe you just want to use it towards your own personal meditation, spa treatments, maybe some counseling services or some personal development. Now, Jane's going to compare both company A and B. And although that benefit is the exact same benefit, it's wrapped up in a better bow with company B, and it's given in such a way that is presented to the employee that that employer cares about their wellness, cares about their lifestyle, and cares about what really matters to them. Group insurance is increasingly seen as a necessity for job seekers. So unless you have a spectacular group insurance packages, chances are your employee benefits probably don't do much to set your company apart from the crowd of employers that are out there today. Traditional benefits are just not cutting it anymore when you're trying to attract high caliber candidates in a very competitive market. By offering a lifestyle spending account, you can show applicants that you care about your employees by going simply beyond a paycheck and beyond a standard amount of benefits. It showcases your commitment to promoting workplace culture. And when implemented and promoted thoughtfully, lifestyle spending accounts can be a very effective way to differentiate your company in a very difficult market. Okay, let's talk about how to use lifestyle spending accounts to retain your employees. So here's kind of an interesting little statistic I found that 77% of employees believe that health and wellness program put in at their organization positively impacts the culture at work. Because as work-life balance is more and more important to employees and engaging your employees is becoming more and more challenging, employees are struggling how to add benefits to keep the employees committed to that organization. Just in 2021 alone, every month, an average of 4 million workers quit their job, being the highest average in record of all time. So in this ever-changing landscape, perception is everything. So we're talking about perception. Again, that same $1,500 bonus to $1,500 vacation plan, it's perception. By offering a lifestyle spending account, an employee's perception that their employer truly cares for their health and well-being creates a more committed and happier workforce than those that do not. Every employee has their unique needs. A 26-year-old college graduate, for example, has very, very different needs than someone who's planning for retirement. I mean, it just makes sense. If you're just starting your life in a workforce, you're going to have different needs and wants than that person who's on their way out. With the shift to increased remote or hybrid work options, there's a steady change in employers offering more flexibility and benefits that speak directly to their employees' unique lifestyles. Wellness plans. Wellness plans can offer employees a range of benefits, and employers can customize these benefits to best fit the workforce. Taking fewer sick days, lowering healthcare costs, and increasing productivity and morale are just few of the extra benefits that employers can take advantage of by putting in wellness benefits. Moreover, all these benefits work together to empower your employees to develop a long and fulfilling career at your company. This unique health benefit will set you apart from all other employers and help you care for the well-being of all your employees. The variety of offerings provide value to each employee's unique needs and features. The spending controls allow you to customize the benefits however you want at the workplace. So why does this work? Because lack of choice means lack of participation. I mean, you guys know if you put a benefit plan in place that is just going to resonate with one of those generations, it's not going to be utilized across the entire board. So those employees that it doesn't benefit are going to feel like it's not a benefit for them. So if you put in something that just pays for, say, gym memberships, those older people or those people who don't want to join gym memberships are not going to see the value in that. So all employees wouldn't take advantage of something like a gym membership, like I just said. Even if the cost is being subsidized or reimbursement in full by the organization, it's just not going to be utilized. Perhaps they're not motivated to go to the gym. Maybe they're unable to go. But whatever, it boils down to the fact that everybody has different lifestyles and different wants. Something as specific as a gym membership just doesn't appeal to somebody who prefers to, say, do kickboxing classes at a local organization, or somebody who has a home gym at home and they just want to expand and add some different kind of machines there. With all employee benefits, if your employees don't use gym membership, they're not going to appreciate it. In fact, they may even begin to feel resentful that the perks that you're offering do not apply to them. That's how we wind up losing employees that are really important to us, is when perception, we come back to perception all the time. The perception is you're putting in benefits that benefit somebody else besides themselves. So now that we've talked about it, you're like, what is the advantage to the employer? Why would I even want to put this in? There's no tax advantage to the employer. There's no tax advantage to the employee. Why would I even want to do this? So numerous studies have shown that happy, active, and overall satisfied employees make for a productive workforce. I mean, you guys know that employees who are engaged in your organization, happy to be there, are going to give back more to that company. While physical exercise is most often associated with weight loss or muscle building, studies also show that employees who engage in regular physical exercise are more focused and productive during the day. In addition to some of these short-term gains, we're flexing our fitness puns here. Your employee physical and mental health can be a predictor of how much you'll be paying for their insurance premiums and sick days down the road. So healthier workforce down the road means less claims being paid out. So by promoting employee wellness today, you're actually increasing and investing in your company's long-term future. So here's some other creative ways to use a lifestyle spending account. We talked about attraction, retention, but what about some of those other things? Now, we talked about this new hybrid or remote workforce. We've got a bunch of employees working at home. They're not getting the same perks and benefits that a standard employee would. Your standard employee is going to maybe get some company lunches. Maybe somebody's going to bring in some giant cake in a few minutes, I hope, and we can all go get a piece of cake. So there's a lot of different perks and benefits to being in the workforce and being in the workplace. But organizations with large remote workforces may consider providing funds to help employees choosing to fully work from home, or maybe a more hybrid solution. Fully remote teams will miss out, like I said, on-site meals, coffee, games, rewards, and they don't have to commute. So that's nice too. But ensuring that they stay committed and engaged is a whole different ballgame. So how are you going to keep those remote employees engaged and part of your organization when you're not there physically with them? So establishing a suitable remote work environment for them is key to keeping them happy and content. That could be in the form of work passes at hybrid work hubs. Maybe they want to work outside their home in some sort of hub. Maybe you want to provide some sort of co-working spaces or give them stipends for home equipment. Maybe they want an ergonomically designed chair, second monitors, maybe a new computer. You can give them lifestyle spending accounts to help build that remote workplace to make them a little happier. And then what about assisting with inflation and the rising cost of everything? I don't know who's been shopping lately, but it's bananas out there right now. The cost of everything is just crazy. I mean, you go to the grocery store and you pick up a few things and you're spending $100. So many employers are opting to use these accounts to help assist with day-to-day expenses that may become difficult or challenging for employees to pay for, whether it's groceries or utilities, childcare, rent, mortgage payments, other bills. And yes, childcare is a pre-tax allowable account if you have a dependent care account. But what about that childcare cost that you can't submit? You know, things that are not really, that don't fit into that description of what the IRS allows. Maybe it's just day camps, overnight camps, something else. The bottom line is, as each employee is so unique, so are their needs. A lifestyle spending account allows you to satisfy the needs of all your employees by creating that richer benefit plan. Can be used both as an attraction and a retention tool. They're low risk and very high reward. Because your employees don't spend the dollars, any used funds go back to you. So it's another benefit of it. If you're going to give everybody in your company a bonus at the end of the year, you have no say in how that money's spent. But if you give everybody in your company a $1,500 lifestyle spending account, you know, it goes back to that kind of 80-20 rule that you're going to put these things in place. Not everyone's going to take advantage of it, but they're still going to feel like it resonates with them because it's funds that are for what they want. So there's no need for you to monitor or approve how the funds are used. You're going to be using a TPA to manage that portion of it. All you have to do is figure out when you're setting this up is how to designate eligible expenses. Some of the things that an employer needs to consider when they're setting up a lifestyle spending account is setting a budget. How much are they going to contribute to an employee's account? And how quickly will the employees be able to spend those funds? Are they going to be given to them at the beginning of the year? Are they going to get them at the beginning of each quarter? Are they going to accrue a little bit much every month? How that money goes into the account, completely up to the employer. What happens to the funds at the end of the year? Again, up to the employer. Will those funds go away? Is it going to be a use it or lose it type plan? Are you going to allow those funds to roll over from year to year? Are funds going to be available right away? Are new employees going to be able to get funds on day one? Are they going to have a waiting period? Completely up to the employer. Is a lump sum going to be available first day? Are they going to be, is it going to be triggered by activities? For example, in the one I gave, they have to exhaust the EAP program. Maybe I want a walking program. You get 10,000 steps a day for 2 weeks, you can get into the plan. And what employees will be eligible? Are there going to be different eligibility for different employees? Are they going to be used for part-time, full-time? Is everybody going to be able to take advantage of this? For example, if an employer offers $500 LSA, the employer could deposit the full amount on January 1st of each year and allow the employees to spend that full amount immediately or throughout the year as they want. Or you could spread out those contributions. So maybe you're going to do $125 a quarter and make that available to them. It's important to decide whether employers will be able to roll over any lifestyle spending accounts in subsequent years. Like I said, use it or lose it. Are you going to allow that to happen? If an employee who purchases a big ticket item, such as a piece of exercise equipment, can they submit the receipt for reimbursement at any time and receive the reimbursement at any time, or only when the funds become available? So when you're helping your group set some of these up, these are some of the questions that you're going to want to ask them. So let's talk a little bit about substantiation and the tax implications of a lifestyle spending account. This is a post-tax account, as we said, so there's very little restrictions on reimbursement and required substantiation. When I said this is kind of a loosey-goosey kind of account, it is. They can set up any kind of substantiation requirements they want, meaning the employer. They can consider, they have to consider what they want the TPA to accept or not accept. Maybe it's a very detailed receipt. Maybe it's just a claim. Maybe they don't want any substantiation, or maybe there's something in between. Maybe a simple receipt, maybe just a monthly statement on their credit card showing something they've paid. It can be as tight or as loose as the employer wants. There's very few restrictions on those kind of requirements. The tax implications are a little greater because this is a post-tax account. So all money utilized from a lifestyle spending account must be added to an employee's gross income and taxed accordingly as expenses are incurred. TPAs would typically provide claims reports as claims are submitted, and the employer must reimburse the participant through payroll to ensure the taxes are taken out as claims are used. At the end of the plan year, your TPA should provide a final report within 2 weeks following the end of the plan year, showing all the funds usage of all the participants. They have to be added to W-2s as these funds have tax implications. Payroll taxes must be taken out at the time of usage. There's no run out or grace periods associated with the type of account. Funds must be used within the tax year and added to payroll within that tax year. So for example, any plan ending 12/31, all claims must be submitted prior to the end of that last payroll run. So if the last payroll run is December 15th, that's when the last submission needs to happen. Any funds used within the plan year must be added to that calendar year's payroll. At the end of the plan year, all unused money will roll over to the next plan year. And then the year-end usage reports will be sent to the employer via email within 2 weeks. There's a few different ways to pay somebody for a lifestyle spending account, and it depends the TPA you work with. I'll tell you how we do it here at HRPro. There's a variety of different ways. So way number one, which is the easiest and best method to do, is when a claim is incurred and we get a claim and we follow the substantiation guidelines by the employer, we will send a claims report to the employer. They will add that money into their employee's paycheck, and that they will reimburse them that way so that taxes are taken out as the claims are incurred. The second way is that HRPro manages and we pay the client directly or the participant directly. In that case, what happens, we still have to send that same claims report to the employer. They have to add that money into payroll, get the payroll taxes taken out, then reduce it by that initial claims amount. That was a little more confusing for participants or employees to understand, because HRPro, if they submit a $100 claim, HRPro is going to be sending them a direct deposit for $100, but their paycheck that maybe is $1,000 every paycheck is now going to be $900 and something dollars, and they're not going to understand why that's different, because they're not going to realize that they paid payroll taxes on the money that was paid out. It's a cleaner system for the employer to pay in those checks, because as an employee, I'd go, oh, okay, my check's normally $1,000, it's $1,100 or $1,099 something because I did a lifestyle spending account claim. So it just makes better sense. We can also do reimbursements throughout the year, send a claims report to the employer at the end of the year, but that's even kind of worse for the employee, because then all the money they did throughout the year gets added into that last paycheck, and then all the taxes taken out, and then that money taken out. So their paychecks wind up being much less. It's cleanest and easiest if you do it as they're incurred and they submit it for reimbursement through the employer. And that's pretty much the whole presentation on lifestyle spending accounts. I'm going to kind of open it up to questions and chat. If anybody has any questions or anybody wants to chat about anything, happy to answer any of your questions. And just to give you an overview, yes, we are going to have recordings of this available for you. So if you guys are asking that, we will have these available to share with your team or share with whoever you want. Does anybody have any questions on how we manage the tax implications, or how you can use this with your employees, or how to present it to your employers? Well, if we have no questions, then I just want to say thank you very much for joining. Really appreciate you guys taking the time for listening in on our lifestyle spending accounts. Again, I am Jennifer Wajeeh, Vice President, Sales and Marketing for HRPro. If anybody has any questions, many of you already know me. So if you guys have any questions or you want to dive into this further, I'm happy to answer any of your questions. And one last thing about HRPro, just for your knowledge, HRPro is one of the longest partner provided solutions for UBA. We've been with UBA since the beginning, and we are here to answer all your compliance questions, anything you need to know with consumer-driven healthcare accounts, COBRA, compliance, or HR consulting needs. So thank you so much and have a wonderful day.
Okay, thank you, Jennifer, for your thought leadership and sharing your expertise with everyone. We have a few notes that thank you for that. And we want to remind everybody to join us again, that we are going to have our next session on July 18th. It's the payroll versus benefits admin landscape in 2023. Who can you trust? So again, thank you everybody for attending and have a wonderful afternoon.